we did say at the end we get a little tinfoily, and we didn't.
Yo, let's break them out.
We didn't get to do that. So yeah, let's real quick.
I was trying to look for something that could be a tinfoil.
What if your Spartan helmet?
Right? That I've actually tried to put it on. It doesn't fit at all. Apparently the hoplites had very small heads. Yeah. I don't know what it is. I think it's mostly just thick bone, because my head doesn't fit much, bro. Tinfoil hat. I think one of the main front run questions I see is this world around FTDs, the potential for there to be a cyclicality to them and the potential impact to the markets. Do you have an opinion at a high level of that?
So yeah, FTDs and FTD cycles. You know, I'm gonna table that because we're gonna bring on. We've spoken with John Welborn, a professor at Dartmouth, who knows this stuff way better than I do, and I'm gonna just say, let's get him on next time. To talk about that. That's what we really wanted to sort of, we want to talk about it. We want to address it. A lot of people are confused or just interested in what this can possibly mean and what these cycles mean. And I'm not going to pretend to know enough about it. I know that, you know, there are these settlement cycles at play. I don't know that, you know, there's a ton there, but you know, it's not really, that's not really my area.
Which is fair, but don't forget, this is tinfoil hats. We're not responsible for anything we say here. This is,
and I think there's all sorts of stuff going on with XRT.
Speculation.
And it's crazy. Like, clearly XRT is being used in a certain way, where it's got massive failures to deliver. It's got crazy high short interest. And it has been on the reg show threshold list. I think we said something like 1,700 days, and that was the last time we talked about it. And I haven't been paying attention, but I assume it's been on there since, but maybe not. But it's, you know, it's really something quite crazy is going on. And I think people that deny it, you know, you don't have much of a leg to stand on it. I think people probably think that there's more there than there actually is, but you know, again, I don't know. And this is the only thing I can say. The thing I wanted to talk about, though, you know, you and I talked about Roaring Kitty's options position. We talked about what we thought was going to happen. I actually think we were speculating a bit, but we kind of nailed it. We did.
Of course, you're speculating. This is all speculation. It's impossible to know. For anybody that thinks that anybody could know what happened, they are straight up lying. Again,
I agree with that.
I tell you, we really need to get the right kit for this part. We need like a straight up tinfoil hat so that everybody knows we are just talking out of our ass.
Let's say he exercised his options.
He didn't.
All right.
He didn't, but okay.
Okay. Let's. But actually, it matters because of this tinfoil. Okay, here's the tinfoil.
Now, see, guys, you guys are welcome. It took me a minute to get Dave into the tinfoil hat mindset, but we are entering.
Did he come into this with a plan to exercise the options or not? Okay, to me, that's the question. And here's sort of, to me, the game theory around it, right? So, okay,
talk to me.
He came in planning on exercising the options and potentially creating a gamma ramp. Maybe he wanted to do that. Maybe he didn't. But if he came into this thinking, I'm going to exercise the options, if that was his plan all along, at some point, the stock was so high that he could have exercised the most of, if not the entire position. And he didn't.
Correct.
He didn't. So,
correct.
If he was always going to exercise, in what world do you not exercise them at that point?
To me, it could be based on a slightly larger thesis he might have had. It could be based on the timing of the exercise. That's one of...
You think that? Yeah. I've seen that. I've seen that on Reddit. I've seen people talk about that. Yep.
I haven't, to be honest. I don't know what the prevailing thesis is there. But to me, based on the movements I see him make, and again, I let everybody know, I traded the event that we saw, what was it, 21, And then I traded this event because it pops up on option scanners for me, but I'm mostly trading as it pops up as I see it. I'm nowhere near as read into a lot of this as other people. So I put that out there because some people are like really deep on all of this stuff, and I respect the level of depth that they have. But anyways, when I look across some of what I've seen him do, it's clearly not purely for money, in my opinion, right? There's obviously some departures from that. So part of me thinks part of the calculus that he has is disruption, making movements that potentially can disrupt. And the other guess that I have is I don't know how the equity offering impacted his decision cycle. That's the other component that I'm unsure of.
That's where I get the final layer of my tinfoil, in that
Perfect.
I think he was caught off guard by the offering. And I think
so too.
The pressure, the downward pressure that put on the stock derailed his plans, and he had to adjust on the fly. And so I think that's what we saw. Here's the other,
of course. Here's the other part to that, though, that I'm curious about. His position now is only 9,001,000 shares only.
Yep.
He has more money in the account. He could have had a bigger position if he wanted.
Yes.
True. So when I see him buy 120,000 of the 20 calls, my opinion, exercising all of them was not part of the plan, even from the jump. That doesn't seem like the case at all. He didn't have the capital in the account. And the fact that what we see his position at now, even though he had more money to use if he so chose, and he didn't, it looked like he had a specific position in mind. That's my guess.
Okay, interesting. So you think he had a target, he drove to the target, everything like that this is his plan unfolding mostly as he expected?
I think loosely. Yep. I think that the prospects of him making more money on the short call or on the long calls is here or there. I'm sure, who wouldn't like that? But I don't think it's a mistake, clearly, that he landed at 9,001,000 shares, very specific number. And also, he still has more capital in the account. He's like over $3 million. I think it's like 3.6 or something the last I saw. He could have bought quite a bit more if he was so inclined. So he landed on that number very purposefully. I think somebody told me that was like the number of shares Ryan Cohen had like a while ago. I don't know what his position is now. Yeah, but yeah, to me, there could be a correlation there. That's one of the reasons why I'm so infatuated with this whole thing, is because the lore is unbeatable. It is absolutely crazy.
He literally is memeing with his position.
Yeah. Now, Turdford says CMMS RC. Yep. I think the only problem with that is pre-post split, or I guess equity offering and then split, because I think that there's do we know what Ryan Cohen's position is right now? Because I've heard some people say it's the same. I've heard other people say it's much larger now.
Oh yeah, no, he has continued to buy in.
Okay.
And I think we're close with it to his cost basis where we're at right now.
Got it.
In terms of where it's trading. Let me see if I can quickly.
Yeah, because that would be an interesting benchmark as well. Like everything that I've seen so far from Roaring Kitty, it's funny because he puts on a facade of shaking a magic 8-ball and like playing games, right? He's having a blast. He literally is so entertaining. But you could very clearly tell that there is a clear plan, a very clear plan that dude is executing.
Yeah, I see 36.8 million shares owned by Ryan Cohen.
Okay. So then the last question, I know that it's about time for you to go, but why the 9,001,000 shares? I haven't seen a good answer to that yet that I fully on board with.
Well, I mean, I think that's the point was, pre-split, that was Ryan Cohen's initial position. So even though it doesn't match post-split, there's at least some meaning to that number.
But what's the meaning?
Just that it's like a call out to Ryan Cohen's original buy-in, which was really what set up all of this.
That part I'm following for sure. But why? Okay. What's the reason behind it? Why the call out?
Why do that? Why call out? Yeah.
Yes. Why? Damn it.
Why? I guess. Yeah.
I tell you what.
Why not?
That's exactly what we need the audience for.
I'm going to
That's
throw
exactly.
this weight around, and I'm going to show you that nothing matters. And I can put on like this crazy sized trade and still meme it up even in the trade. That's pretty badass. Come on, right?
Pretty entertaining. Scott
Yeah.
says, so did he sell his contracts to buy shares? That's the assumption. And then Scott says, didn't RK's cost basis not go down? It would have if he exercised the 20 strike. So what we found out is I think it's the E-Trade platform. And again, this is kind of more normal anyways, is that they do use strike plus premium in there.
In the cost basis. Yeah, so it would have gone up if he exercised.
The tricky part anyways is that if I have a video out that I went through all of the math, if that scenario played out, and it's still not accurate, it still doesn't line up perfectly.
Yeah,
but
it
won't line up perfectly because if you have 120,000 contracts, you have an average basis, $5.60, whatever it was. I can't remember. But the point being is that's an average. So that means some of those contracts were above that, some of that were below that. We don't know out of that 120,000 which contracts were exercised at what basis. But we do know that the residual 4,001,000 shares comes out to like $26 a share-ish on his existing position. We know that. But we can't tell exactly how he got there. Now, based on the options volume that we saw, and based on the position as it's laid out, and based on the lineup with the market prices at those levels, it does look like, at least in my best opinion so far, that he did sell and then buy the shares. That's my best guess.
Okay.
Because one other thing, sorry.
Yeah.
There was still like 30 cents of time value left in those calls. That doesn't sound like a whole lot. But if you do that on 120,000 contracts, it's well over $3 million that just would have been gone if he chose to exercise, just poof, gone. And some people brought up the counter argument, fair, about the tax considerations.
Tax implications, yeah.
It does not seem like this dude is super focused on tax considerations. Again, because if that's the case, you don't buy 120,000. You know you're not going to exercise them. You know that the majority of them you're going to sell and scoop up, again, your 9,001,000 shares. That's not a mistake of a number. So you exercise what? A small subset of those contracts, a third of the total position. I don't think he's super concerned about taxes. That's not what I see there. But again, pure speculation. And it's super important to reemphasize, nobody can know. You literally cannot know. There's no way to clearly decipher based on the information we have.
Except for Roaring Kitty. He knows.
Except for
maybe he'll let us know. All right. So we just hit an hour. We're going to cut it at a clean hour. It was supposed to be 45 minutes. I'm going to get some grief for that. That's okay.
Hope you get flogged.
Yeah. Great conversation. I really enjoyed this. Really, thank you everyone who joined. We just got excellent engagement and questions. It's been, we've been reading every one of them. Really appreciate it. Again, we're going to try and do this on a somewhat regular basis. We're going to try and get, more informative videos out there because I think a lot of people like to consume information this way. And we are going to get our friend of the show, John Welborn, like I said, on soon to talk about FTDs and these different settlement cycles. Scott, you're asking, can this be rewatched? Yes, this will be on our YouTube channel. We're going to get it posted up quickly. So again, thanks everyone for joining us. We'll hopefully see you soon on Irvin Finance. Go to irvin.finance. There's great conversations happening in the communities there. Great tool for researching stocks and and engaging with other investors in the companies that you are a shareholder in. We have verified shareholder communities, and we have effectively solved the bot problem. So get onto irvin.finance and check it out. Check out our YouTube channel. Erik from ES Invest, check out his YouTube channel. Always a source of great information and options market insight. So Erik, thanks again for helping us and for joining us today.
Glad to be the idiot in the room.
All right. Thanks, everyone. Have a great day. Stay cool. It's hot out there. And we'll catch you next time.
See you guys.